A decade ago, cannabis felt like the cleanest new industry story in America. You had a product with real demand, a massive black market already proving it, and a wave of legalization that made it feel inevitable. It seemed like something similar to alcohol after Prohibition, and for a minute it really looked like that. Stocks went parabolic, brands popped up overnight, dispensaries started appearing in expensive neighborhoods like they were boutique gyms, VCs and private equity showed up with spreadsheets and pitch decks, convinced they were early to the next enormous industry. Then reality hit. Not all at once, more like a slow, brutal grind that turned into a full-on collapse. Prices fell, margins vanished, companies that looked unstoppable started quietly selling assets, closing stores, and laying people off. The public markets became a graveyard. Even in the states where weed is fully legal, the legal side of the business often feels like it's fighting with one hand tied behind its back. And here's the part that makes it extra weird. People didn't stop buying weed, demand didn't disappear, so why did the industry implode? That's what I want to unpack. Because the downfall story is not just too many companies, it's not just bad management, it's not even just crazy taxes. It's a bunch of structural problems layered on top of each other. Some were predictable, some were self-inflicted, some were basically designed into the system from day one. And once you see how the system works, it becomes obvious why so many big players lost money while smaller operators in the right places still survived. So let's walk through it like a business story. What people thought cannabis would be, what it actually became, and why it ended up as a race to the bottom. Cannabis had the perfect pitch. Huge total addressable market, a product people already used, a cultural tailwind, and legalization expanding every year. Then Canada legalized recreational cannabis in 2018, and that was gasoline on the fire. It made the whole thing look institutional, like, see, this is actually happening, the world is normalizing it. That created the first big illusion. The illusion was that cannabis would scale like a normal consumer packaged good industry, meaning build brands, buy shelf space, create a premium tier, charge more, and then own the distribution and print money. That's how alcohol works, that's how tobacco works, and that's how cosmetics works. But cannabis is not those industries, because those industries are national markets with consistent rules and normal infrastructure. Cannabis, in the US especially, is not a national market. It's like 24 separate countries pretending to be one category. Each state has different laws, taxes, supply chains, licensing, testing, standards, packaging, different everything. So you had founders and investors building national cannabis companies in a place where national scale is literally illegal. That mistake alone destroyed a lot of business models. Scale usually means centralize your production, move inventory freely, standardize your operations, and lower your costs. But in cannabis, you can't do that across state lines in the US because federal law still treats marijuana like a serious controlled substance. So each state becomes its own little walled garden, and companies have had to rebuild their entire businesses from scratch in every new market. That means duplicate facilities, duplicate staff, duplicate compliance, duplicate capital costs. So instead of scaling, you're cloning. And when you're cloning expensive operations across multiple states while also paying punitive taxes and higher borrowing costs, you're not building a brand empire. You're building a cash-burning machine. Before we continue with the rest of the video, it would mean the world to me if you could like and subscribe if you are finding this video in any way interesting. It will really help me create more stuff. Let's get back to it. If you want to understand cannabis's downfall in one sentence, it's this. Cannabis businesses tried to operate like legitimate companies while the federal government treated them like criminals. That creates a bunch of second-order problems that compound. First, you have banking. Even today, most cannabis operators in the US deal with limited banking access. They can't just walk into the same financial system as everyone else and get normal loans on normal terms. They can't process payments as smoothly. They end up dealing with cash or expensive workarounds or specialized institutions that charge more. Second, you have taxes. This is the killer that people outside the industry barely understand. IRS 280E. 280E basically says if you're trafficking in a Schedule 1 or 2 controlled substance, you can't deduct normal business expenses. Not your rent, not your payroll, not your marketing, not your security, no insurance, not your admin. You can deduct cost of goods sold, but you don't get the normal business deductions the way most businesses would. So you end up with effective tax rates that can be absurd. Operators have been complaining about the tax burdens that can blow past what feels survivable, especially for retail. That means a cannabis business can look profitable on paper at the gross margin line and still get crushed after taxes. It also changes behavior in a really toxic way. Instead of investing in customer experience, training, operations, or quality, businesses become obsessed with financial engineering and cost classification. Because if you can shift expenses into cost of goods sold, you reduce taxable income. So you get companies spending more energy on tax survival than actually building their business. Next, you have interstate commerce. This one is sneaky. Because in most industries, if one state produces too much supply, companies can ship to another state, prices adjust, oversupply gets absorbed. In cannabis, if a state produces too much, you're stuck. You can't ship excess product to a neighboring state even if there's demand there. So you get these weird situations where one state is drowning in weed and another state has high prices and limited access, and legally the market can't balance itself. That makes the entire category more volatile, and it makes competition even more brutal. At the start of legalization, weed was scarce in the legal market. Limited licenses, limited supply, and high demand. That meant high margins. Then the licensing expanded, cultivation ramped, everyone raced to build grows. Everyone thinks they're going to capture the market share. Investors fund massive facilities, companies lock in long-term leases, they hire teams, they build up manufacturing. Then what happens? Supply catches up and overshoots, and weed becomes what it always was underneath all the hype, a commodity. For the average consumer, a lot of product becomes interchangeable. Yes, there are quality differences, yes, there are premium brands, and yes, there are loyal customers. But the average buyer often starts with the price. And in a market where everyone is selling the same basic molecules with increasingly similar form factors and advertising is heavily restricted, the main lever becomes discounting. Once price becomes the main lever, the industry becomes a knife fight. And that's exactly what's happened in many major markets. Wholesale prices dropped hard across multiple states. Price compression became the dominant story. And when wholesale drops, retail drops, and then everyone fights volume. But volume doesn't save you if your costs are fixed and your taxes are punitive. Volume just helps you lose money faster. California should have been the promised land. Huge population, massive cultural acceptance, tourism, wealth, agriculture, brands, celebrities, it has everything. And yet California became one of the hardest places to run a legal cannabis business. Why? Because the illicit market never went away. It stayed huge. There are multiple reports and analysis suggesting that unregulated consumption in California remains larger than the legal market. One industry report referencing state commission study said illicit consumption is still more than twice the legal market. So legal operators are competing with illegal operators who don't pay taxes, don't pay compliance costs, don't pay licensing fees, and don't follow testing rules. And that leads to the most brutal dynamic in the entire industry. The legal product has to carry the cost of the entire regulatory system. Taxes, testing, packaging, track and trace security, licensing, labor compliance, city approvals, legal fees, accountants, consultants, plus 280E on top. The illegal product carries none of that. So the legal product costs more. And then the state looks at the tax revenue not meeting expectations and decides to raise taxes even more, which makes a legal product even less competitive, which in turn then pushes consumers underground. It's a doom loop. California's legal sales have also shown real declines. For example, reporting on California's taxable cannabis sales in early 2025 showed one of the steepest drops since legalization, with industry experts pointing to high taxes, regulatory costs, and illicit competition. So you end up in a place where legal operators are basically forced to run ultra-lean, hyper-local, and obsessed with execution just to stay alive. And the big corporate strategy of scale plus branding tends to get punished, because California doesn't reward scale, it rewards survival. Let's talk about the public market side, because this is where the downfall is most obvious. You had cannabis stocks trading like meme assets before meme assets were even a thing. Tillray, Canopy, Aurora, Kronos, MedMen, Curaleaf, Trulieve, the list goes on and on. A lot of them were valued like high-growth tech companies, but the underlying business was never a software business. It was an agriculture plus retail play. That is not a high-margin category. It can be profitable, yes, but it's not structurally built for the venture-style returns unless you get national legalization or normal infrastructure. And that was the bet. The bet was always federal legalization is coming soon. When that didn't happen, the whole story broke, because without federal legalization, the endgame never arrived. There was no interstate commerce, no normal banking for the entire industry, no national brands the way investors imagined, no consistent rules. So companies kept operating in this weird half-legal world, burning cash, raising debt at ugly terms, and diluting shareholders. Then rates rose, capital got tighter, investors stopped funding dreams, and suddenly cannabis companies had to be real businesses. And the truth was, a lot of them weren't. Or at least they were built for an environment that never arrived. Here's something founders understand instinctively. If you lock in high fixed costs early, you better be right about the demand. Cannabis companies locked in huge fixed costs such as massive cultivation facilities, long-term real estate leases, complex compliance operations, large headcounts, and expensive retail build-outs. They did it because early demand and high prices made it look rational. Then prices fell, and the fixed costs didn't. So you get margin compression on top of an inflexible cost base. That's how companies die. Not because they're dumb, because they built for one world and got another. And then you run into local rules that pile on cost in ways that you didn't really plan for. Depending on your city, you might be blocked entirely, capped, dragged through a political approval process, and forced into expensive requirements and security, maybe even some community commitments. It's a bunch of friction that has nothing to do with the product. That creates a situation where the best operators don't necessarily win. Sometimes the best connected win. And when business starts to feel like politics, capital gets even more cautious. Another underrated factor in the downfall narrative is what happened with hemp-derived cannabinoids. The 2018 Farm Bill created a lane for hemp. Then the market got flooded with intoxicating hemp products like Delta H THC sold in gas stations and online. From the consumer's perspective, it's still weed, or at least close enough. From the legal industry's perspective, it's competition that often isn't taxed or regulated in the same way. So you get legal dispensaries paying insane compliance costs while consumers can buy psychoactive products outside the system. And regulators did start cracking down. There has been increasing legal and regulatory pushback on intoxicating hemp products, including federal activity referenced in late 2025 coverage that pointed toward effective recriminalization of many hemp-derived cannabinoids in 2026. That whole mess confused consumers and split demand, and it made the industry's regulatory story even more chaotic. Here's the uncomfortable truth. A lot of what happened was just a market maturing. Early markets are easy. There's low competition, high demand, high prices, limited licenses, lots of inefficiency you can monetize. Later markets are hard. Competition ramps up, prices slide, and the product starts to feel more interchangeable. Customers get used to discounts, and operators feel the squeeze. Regulators tighten the screws, and demand doesn't disappear, it just gets split across more places. And that's when the only businesses that survive are the only ones with actual operating discipline. The weed industry was filled with people who were great at selling the dream, not nearly as many who were actually good at running a retail business day to day. Managing inventory that expires, predicting demand, keeping shrink under control, dealing with landlords, staying compliant, training staff, and building real local loyalty. So the downfall story is partly just that. The industry stopped rewarding vibes and started rewarding execution, and that transition is always ugly. Now, to be fair, things have moved forward on the federal level, even recently. There's been a live rescheduling process, and the US government has been pushing a shift towards Schedule 3. The DEA proposed a rule in 2024 to move marijuana to Schedule 3, based on an HHS recommendation. And in December 2025, President Trump signed an executive order directing a fast-track push towards Schedule 3, which brought momentum back to that process. If Schedule 3 happens, the biggest immediate business impact is 280E goes away, because 280E only applies to Schedule 1 and 2 substances. That would be a real relief. But rescheduling is not legalization. It doesn't suddenly open up interstate commerce, fix banking across the board, and unify state markets, or make regulatory risk disappear. So even the good news story is a little bit complicated. And that's kind of the theme of cannabis. Every time the industry thinks it's about to become normal, it runs into the fact that it still isn't normal. If I had to simplify the downfall into a few core causes, it's these. The industry scaled before the rules stabilized. People built for a future legal environment that never arrived. Structural fragmentation made real scale impossible. You can't run a national business if national commerce is illegal. 3. Prices fell like they always do in commodities. Oversupply plus competition plus limited differentiation equals price wars, and that's never good for anyone, except the consumer. Number 4. Taxes and compliance crushed legal operators. 280E plus state and local taxes plus compliance cost created a permanent disadvantage. The illicit market stayed huge. Legal businesses were forced to compete with sellers who didn't pay the system's costs. Number 6. Capital markets turned off. Once funding got expensive, the growth at all cost strategy collapsed. And that combo is how you get an industry that looks massive on paper but miserable in practice. This is the part most people miss when they talk about the collapse. Because yes, the big public companies have struggled. Many are still unprofitable, a lot of them are drowning in debt, trapped in slow growth states, or fighting price compression. But on the ground, there are still small operators who survive, usually because they do boring things well. They know their neighborhood, keep costs tight, focus on repeat customers, and don't overbuild or chase flashy corporate strategies. They just run a good small store. Or they run a small cultivation operation with a loyal wholesale base. Or they run delivery with insane customer service. And they treat it like a real business, not some random gold rush. The green rush mentality was grow fast, dominate, and exit. The surviving mentality is stay alive, be local, and be disciplined. Cannabis didn't die, the fantasy died. The fantasy that it would be easy, the fantasy that legalization automatically means profitability, the fantasy that branding alone would create moats, the fantasy that the government would quickly make it normal. What's left is a real industry with real demand operating inside a messy legal structure, slowly grinding towards something more stable. If you live through the hype, the collapse feels dramatic. But if you take a step back, the story is pretty straightforward. Cannabis is a product with persistent demand, but the legal system around it is still unstable, and the business mechanics punish anyone who confuses growth with profit. What happened to cannabis is what happens when a commodity market meets a regulatory maze and a capital bubble at the same time. Early winners made money because there was a ton of hype and the market was inefficient. Later winners survived because they're operationally serious and usually small local players in this case. And until the federal rules actually align with reality, the legal side of the industry is going to keep hindering it. The next era of cannabis is not going to be about who has the flashiest brand or the biggest footprint. It's going to be about who can run a tight ship in a market that does not forgive mistakes. If you enjoyed this video, don't forget to like and subscribe to stay up to date on everything business related.